Welcome to Pivot Point, Strategy for Change. I'm Nik Michael. Today, we're going to talk about a pivot point for something that I think many of you investors will really find interesting and informative. It's Sure Shot, which now is BNKK. When a company bet everything on a new identity, the moment that everything changed. You're a CEO of a functional beverage company. You've got a patented product, stored distribution, real revenue, the fundamentals of a traditional CPG business. And then you make a decision that will either be remembered as visionary or reckless. You don't just shift your marketing. You don't just find new distribution channels. You don't pour more money into advertising. You change your company's entire identity in public on the NASDAQ. This is the story of Safety Shot, a wellness beverage designed to reduce blood alcohol levels, and how in October 2025, it reemerged as BNKK, a publicly traded bridge to a multi-billion-dollar meme coin ecosystem. I'm not here to tell you if this was brilliant or foolish. That verdict is still being written in real time as the stock trades, as analysts publish ratings, and as the market decides what BNKK actually is. What I can tell you is what happens when a company faces a crossroads and chooses the road that very few have successfully traveled. This is Pivot Point. The original identity, what Safety Shot was built to be, let's go back to the beginning. Safety Shot wasn't some vague startup with a deck and a dream. It had a clear, defensible position, a functional wellness beverage called Sure Shot, backed by patents, promising to help people reduce blood alcohol levels more quickly. The pitch was tight. Health-conscious consumers who still want to enjoy nightlife, but smarter. For investors, this was familiar territory. Functional beverages, wellness trends, the metrics everyone understood. Retail expansion, gross margins, distribution deals. Even if you were skeptical about the market size or the valuation, you knew what the business did. There was no question, no confusion about the category. It was a beverage company trying to grow like every other beverage company. And here's the thing about that kind of clarity. It's underrated. When investors can categorize you, when analysts know which comps to use, when your story fits into an existing mental model, that coherence creates confidence. Whether they believe in your growth trajectory or not, at least they know what game you're playing. But by the mid-2025s, something changed. The company wasn't scaling the way leadership hoped. Distribution was moving, but not fast enough. Revenue was growing, later reported at over 1,200% year over year by Q3. But from a small base. The beverage business was real, but it wasn't creating the momentum or market cap the company needed. And that's when leadership faced the pivot point. Do you double down? Pour your money into advertising? Chase more retail partnerships? Ride the slow CPG growth curve and hope the category takes off? Or do you do something else entirely? The decision why BNKK chose a different game occurred in October 2025. Safety Shot made its move. The company rebranded to Bonk, Inc., and changed its ticker to BNKK. It announced a new strategic focus, aligning itself with the Bonk ecosystem, a meme coin community built on Solana, with a market cap in the billions. Let me be clear about what happened here. This wasn't a side project. This wasn't adding a new product line. This was repositioning the entire corporate identity around digital assets, ecosystem participation, and treasury strategy. The beverage business? It stayed. Sure Shot wasn't discontinued, but it was no longer the headline. It was no longer the reason investors were supposed to care. Instead, the story became, we're building a hybrid operating company with exposure to a digital asset ecosystem. We've acquired revenue-sharing interests in profitable platforms. We're accumulating Bonk tokens. We're a public market vehicle for people who want exposure to DeFi without buying crypto directly. Now let's talk about why this is such a radical decision. This wasn't like Netflix moving from DVDs to streaming. Netflix was still in entertainment. The customer was still watching content. The shift was about how content was delivered, not what business they were in. This also wasn't like Adobe moving from perpetual licenses to subscriptions in 2013. Adobe was still selling creative software to designers. The business model changed. Monthly payments instead of upfront purchases, but the customer, the product, and the value proposition stayed the same. Creatives still needed Photoshop. Adobe just changed how they paid for it. BNKK did something extremely different. They asked investors to reclassify the company entirely from a wellness brand to a digital asset ecosystem participant, from predictable CPG metrics to speculative token performance, from beverage distribution to decentralized finance. And when you do that, when you shift not just your strategy, but your identity, you're not just taking an execution risk, you're taking on category risk. You're asking the market to stop thinking about you as one way and start thinking about you in a completely different way. That's not a pivot. That's a metamorphosis. The market reacts. Volatility, skepticism, and opportunity. So, how did the market respond? Exactly the way you'd expect. When a company changes its identity in public, the stock became volatile. And I mean volatile. After the rebrand in October, BNKK announced revenue growth and strategic acquisitions. But by early December, just 2 months later, the company implemented a 1-for-35 reverse stock split to regain NASDAQ compliance. The stock price had fallen below the $1 minimum bid requirement. As of December 2025, analysts' sentiment has been cautious. One research firm gave BNKK a sell rating. Others have stayed on the sidelines, waiting for more data. The stock recently hit a new 52-week low. But here's what's interesting. The reaction isn't outrage. It's not a wholesale rejection. It's uncertainty. Investors are wrestling with a question they can't answer easily. What is BNKK now? Is it a beverage company with crypto exposure? Is it a crypto treasury with a beverage division? Is it a public proxy for the Bonk ecosystem? Is it all three? And that ambiguity is the real tension, because markets can handle risk. They can handle it every day. But markets hate prolonged uncertainty about what category a company belongs to. Some investors see upside. BNKK has acquired majority revenue interests in profitable platforms. The company reported it became debt-free with $9 million in cash by Q3. They've set a target to accumulate 5% of the circulating Bonk supply ecosystem. BNKK's treasury could appreciate dramatically. But other investors see execution risk, governance questions, and a narrative that's moving faster than the fundamentals. There's a skepticism about whether management can credibly execute in two radically different domains, consumer packaged goods and digital asset strategy, without losing focus in both. The question isn't whether the story is interesting. The question is whether the story can be sustained. What history tells us about radical identity pivots? Let's think about this. If this sounds familiar, it's because we've seen this movie before. Let me take you back to December 2017. Long Island Iced Tea Corp., a struggling beverage company, rebranded as Long Blockchain Corp. The stock surged 289% overnight. Trading volume spiked 1,000%. The problem? The company had no blockchain business, no experience, no operations. It was a name change designed to capture hype during the crypto boom. Within months, NASDAQ delisted the company for making misleading statements, and the SEC launched an investigation. In 2021, regulators charged 3 people with insider trading related to the rebrand. The company never built a functioning blockchain business. There are other examples. Kodak announced Kodacoin in 2018, a blockchain initiative for image licensing. The stock jumped, but the project never gained traction. Various small industrial companies rebranded as crypto-focused entities during the 2017 bubble, attracted attention, then faded when execution didn't follow. The pattern tends to repeat in all 3 phases: attention and volatility, headlines, social buzz, sharp price movement, skepticism, and compression. Analysts dig in, fundamentals get scrutinized, valuations compress. Either way, the new strategy generates real revenue and the story stabilizes, or the narrative collapses. Most radical identity pivots fail at phase 3. The story proves easier to change than the underlying economics. So, what makes BNKK different? What could make BNKK different? Here's the honest answer. It's too early to know, but there are structural differences worth noting. First, BNKK didn't abandon its beverage business. Sure Shot is still operating. Revenue is flowing from that division. The company isn't burning the old model to chase the new one. It's trying to operate both simultaneously. Second, the digital asset strategy isn't just a name change. BNKK has acquired real revenue sharing interests in platforms like Bonk, which reportedly generated $30 million in revenue in July 2025. The company now holds a 51% revenue stake in that platform. There are actual cash flows tied to this strategy, not just token holdings. Third, the company is positioning itself as a hybrid. Part operating business, part digital asset treasury. The pitch is that public market investors can get exposure to a high-growth DeFi ecosystem without buying crypto directly on exchanges. But the unresolved questions remain. Can leadership credibly execute in both consumer goods and digital asset strategy without diluting focus? Will the beverage business grow, or will it become a footnote that distracts from the digital narrative? Will the digital treasury create value, or will it just introduce extreme volatility that obscures performance? And here's the fundamental tension. Does the market reward optionality, or does it punish ambiguity? That's the bet BNKK is making, that investors will value the potential of a hybrid structure more than they'll discount the complexity of understanding what the company actually is. So, what is the real lesson? When identity becomes the pivot, let me bring this back to the decision that started everything. Safety Shot could have doubled down. More marketing, more stores, more traditional growth, raise capital, build the brand, play the CPG game. But leadership looked at the landscape and decided that path wasn't fast enough, that it wouldn't create the market cap or momentum they needed, that the opportunity cost of staying in a familiar lane was higher than the risk of becoming something entirely new. That's the essence of a pivot point. It's not just about changing tactics. It's about asking whether the identity you have is the identity the market will reward. Netflix faced that question when DVDs were still profitable, but streaming was the future. They didn't just add streaming, they eventually stopped inviting DVT executives to company meetings. Well, because the old business was preventing investment in the new one. That's the brutal decision. But it worked. Adobe faced that question when perpetual licenses were still generating revenue, but the market wanted predictable recurring streams. They alienated customers. The stock dropped 12% initially. Over 50,000 people signed a petition against the change. But Adobe committed, and today they're worth over $240 billion. BNKK is testing the same hypothesis in a different domain, that a company can hold two identities at once. Ask investors to value optionality over clarity and survive long enough for execution to catch up with the narrative. The difference is this: Netflix and Adobe pivoted within their industries, entertainment and software. BNKK is pivoting across industries, from consumer goods to digital assets. That's exponentially harder, because you're not just asking existing investors to be patient, you're asking them to become different kinds of investors with different risk tolerances, different valuation frameworks, and different time horizons. Markets tolerate risk. They tolerate experimentation. What they resist is prolonged uncertainty about what a company fundamentally is. Right now, BNKK is in the middle of that test. The stock is trading. Analysts are watching. The digital ecosystem is going through its own cycles. The beverage business is still operating. The outcome is unwritten. But for leaders listening to this show who are contemplating their own radical pivot, the BNKK case offers a clear lesson. Changing direction is hard. Changing identity is harder. And when that identity shift happens in public, the reaction isn't just about whether the strategy is right, it's about whether the market believes the story can be explained, executed, and trusted over time. Sometimes the biggest risk isn't staying the course. It's making a move so bold that the market can't decide what category you belong to anymore. That's the risk BNKK took, and we're all watching to see how it plays out. This is Strategy for Change. This is Pivot Point. My name is Nik Michael. I look forward to seeing you till next time, and I leave you with that same question. What's your pivot?